What's good? What's good? Good morning. Let me know you can hear me. Let me know you see me. How we doing? Hope all is well. I'm gonna get started for today. Okay. Get our screen share going. Go. Perfect. What's good, Barry? How you doing today? Good morning. Good morning. Birds outside chirping. Charts looking good. Good trading week already. We up, baby. We up. How's your week going, Barry? I'm going to drop the StreamYard link for anyone who wants to join in, of course. Here we go. All right, shoot, let's just get going. We'll take a look at the news. It's the economic side I like a lot. It's been drawing a blank on me. It should come up. Might just look at Forex Factory. Good old Forex Factory. Let's go back to it. It's good to hear. I'm doing great, bro. Hear the birds in the background, just enjoying that California life, that trader life, making sure I get my ass up and, stay productive, man. Can't be sleeping on my ass all the time. But yeah, we're going to get this going. I'm going to pull this up on making sure I get my ass up. Pull that up on my phone right quick. All right, cool. You see. Tune in. But yeah, let's take a look at the news right quick. I'll go ahead and filter for high impact only. Hey, I got crows outside my window, but I need that fresh air. All right, so as you see, we have FOMC today. That's basically it for the week, right? Unemployment rates. Let's look at the whole week, though. How do I pull that up? Calendar? Okay, let's filter once again. All right, there we go. So now we got the whole week popping up. So yeah, today we got FOMC. We got employment change, unemployment rate. Tomorrow we got CHF, pound, and yen news. Interesting. And then Friday we got the Fed chair, Powell, speaking. So, but let's just focus on the day. 11 my time. So that's in precise about 2.5 hours. 3.5. Yeah, 2.5 hours. So let's see if we see anything for FOMC. We loading. It go a little slow sometimes when I'm streaming, but once we're at the site, we should be fine. So bear with me. StreamYard link is pinned currently. So whoever want to come up on the panel, chat with me, we good. So FOMC gonna affect USD. Let's go look at the DXY. Bullish, right? What can you say? Another strong bullish week. The 2 weeks ago, we kind of played off the highs, induced, but now we continue to go bull. We broke the previous high. Looking left. I don't see structure anywhere near until, 2001. So definitely times of inflation. They talking recession. What are we going to do with that information? Anybody? Dixie is strong. So do I care that we're inflating? Do I care that stocks and cryptos are plummeting? Maybe a little bit because I got holdings. But in terms of Forex, do I care? No. What I'm going to do is look to short the dollar. Let me repeat that. I'm going to look to go long on the dollar and short pairs like XXX USD. So I think I got my setups mapped out already. Let's go look at AU. We'll do AU. Yeah, this is what I got for AU. So anybody be wanting my analysis or whatnot, there you have it. Right, we're overall bearish on this. Dixie is up. All right, so it looks like we had a bullish induction for May, for all of May. Right now, June here looks like we're back on trending down. Seeing some nice lows that could be worked. So, yeah, I'm just looking for a pullback. Maybe we get it for FOMC, right? Maybe FOMC is that stop hunt that activates my already pending order at 0.7. All right. About 40 pips away. All right, so that's AU. We got a pending set at 0.7, 10 pip stop loss. We'll see what happens. EU going to be a similar deal. But for me, I don't see a pullback. So I don't have any type of setup for this. Clearly going to come to these lows, in my opinion. Easy another 50 pips that it's headed to. Likely will, blow past that. If anything, just to work the bottom. But no setup for that one. GU, we do have a pending on this as well. We did share this analysis to the analysis group. And yeah, similar deal. Bearish, because we have a bullish Dixie, which is the DXY, the dollar index. Had a bullish induction of a month of May. June come, we plummet. So either we trapped under here, it's a stop hunt, and we're gonna blow past people, or we're just gonna pull back, and that's what I'm looking for. So my order is in, my rules are met. Similar here, NZ. Since I'm in GU and AU, I'll probably just chill, you know, but let me see if I see any type of entry potentially. Buy followers, prime, and viewers on. Bro, if you don't get your food, how I boot this dude? Trying to talk about buy followers. Man, I got it. Yo, Big Freezy, what up, bro? What you doing up in here? Yo, hey, I dropped the StreamYard link if you want to come up on a panel. I know you got an extra crisp camera, bro. But yeah, that's the StreamYard link right there. Mo asks, do I still use DMAs? I don't really. They still are a confluence of mine. So say I wanted to throw them on the charts right quick for added confluence, I could easily do that, right? So look how first, let me show you how. Hey, Freezy in here got me hyped. Hey, that's before. Hey, we appreciate you, bro. Hey, Big Freezy, make sure you drop your link in the chat and let them know where they can find you. We know we got the cookbook, we got it all. Big Freezy's a homie of mine, a close friend. He has an interview on the Winlife podcast. He was the finale on season 1. So definitely check him out. He's a very good dude, a brother of many talents, and an entrepreneur at that. And you know, that's what Winlife is about. It's about that entrepreneurial spirit, whether we're starting a business, we're being content creators, working on our brand, or whether we're just investing, trading, day trading, Forex trading. So, but back to Mo, you're saying, do I still use DMAs? I don't necessarily use them. But they are an added confluence, and sometimes I'll use them just for that, an added confluence. So back to New Zealand dollar. Since I already have a bearish bias, from here I'm gonna look to go short, but we wanna pull back, right? We want to enter at a good price. We know we don't want to enter our sell here, even if we're looking to sell, because we don't want to get drug into the drawdown. We don't want to have to use a big ass stop loss in order to make the trade work. In addition, you have to use a stop loss. You want to have a tight stop loss to get that good risk reward. And that's how you make these fire ass trades where you risk 2%, you get 50%, 20%, 10%. So for me, what I've been working on, what I've worked on for years at this point, since learning market structure with Dylan, kind of seeing behind the veil and understanding the market maker, is finding ways to find where the pullback's going to go to, right? So what's the tool that we've used? DMA, ECR, right? It all stemmed with Brandon teaching us EMAs, the EMA cross retest system. So for me, I started back testing other confluences, but it's all predicated on going with the momentum. All right, so for here, this is a Fibonacci retracement. I'm hiding the levels and everything, but all it is a retracement to the 38.2 Fibonacci level, right? So what you'll notice is a lot of ECRs, a lot of DCRs, they go right to the 38.2. And if you think about it in terms of momentum, right? In fib levels, we have what, the 25 and the 38. Oh, sorry, 22 and the 38. So that's like a 22% pullback, 38% pullback. Think about it. If price shoots down 100, right? 100 pips, and then it comes back 38 pips, we're still technically going down in that 100 pip move. Now, let's say price retrace 50, 78. Can you really say that you still have momentum? No, you can't. So for this setup, I like the 38, right? Because we're going to have the momentum on our side. And it's all relative to time frame you're using, right? Right now, we're on the 4 hour. So I draw my 38. We'll see if this works out. It might not work where I like this one, but we'll jump to other examples because this is how I start to find confluences. All right. So let me see my next confluence. Let's see if I find a nearby key level, right? A whole, a quarter, or a half level, right? And it's okay if you don't, but when these all align is when I start to kind of know where price is going. All right. All right. So now I've drawn a second confluence, which is my key level. All right. Let's just put it, let's mark it. Key level. See? Actually, let me take it away. It's kind of overlaying. But yeah, we have a key level and we have a 38 fib. Now, I even have more confluences, but I'm not going to bring those in because I'd have to teach you order blocks and order flow. And that's not something I'm teaching right now, okay? Necessarily. But let's go ahead and throw the EMAs on. This is going to be a 96. Let's just make sure we got the 48. 96, 48. All right. Those were the initial DMAs. Everyone and their mama know now. They get the cat's out the bag. All right. So you could always look at a 15-minute ECR, right? And you see how the system works, right? Boom. These are the entries. The first one would actually been a perfect entry. And notice how it went right to the key level and the fib level. Interesting. But I'm speculating price is going to come back there to activate an order. So let's jump up time frame. 4 hour. To me, this is my favorite time frame a lot of times. And you might think like, oh, 15-minute, we're going up on the EMAs. But think relative to the time frame. I'm looking at a 4 hour move. You see the EMAs crossed here. And they're just starting to give that. So theoretically, say price hits here and drops. Respecting the DMA, activating at a key level, activating at a fib level. Those would be 3 confluences for me. Now, you don't necessarily need to even have all that, right? You can just use your EMAs. You can just use your fib. But hopefully that answers your question, Mo. Was that helpful at all, family? Hopefully so. Y'all can, if y'all have any other questions, anything like that, go for it. But yeah, I'm not going to take this trade since I did already set pendings on GU and AU, but we'll go ahead and map that out and we could check on it later. But I do think these moves are going to happen within the next 2 hours. Just with knowing how FOMC works, okay? So now I move to USD Cad. Been hella ranging, right? This thing been ranging for a year. Granted, it is it's only basically like a 700 pip range, if that USD Cad's been going back and forth between. All right, so I do speculate it's going to keep buying. at least to these highs, play off these highs. I mean, the structure's right there. That's about 100 pips up. So to me, that's worth the move if I can find one. We already know I'm looking for a pullback. Not getting one right now. Just kind of chopping, ranging. So I don't have anything on this. I need to see it pull back for me to enter. So say it started to pull back. And then maybe I look at this level, theoretically, right? And then, so it'd be my fib. And then I look for my key level. This is how I like to do my confluences. The reason I like key level so much is because it's a very objective number where price goes a lot. And in my back testing, I found that price goes there a lot. So use your own back testing. Certain pairs even respect key levels more than others. It's for you to figure that out, but I'll give you a hint. Cad pairs love key levels, right? Okay, so then boom, I got my 1.28. So now I'm seeing fib, key level, and then let's just say, right, say that happened, and then our EMAs are right there supporting, right, from my DMA heads, my ECR heads. Boom, I would have multiple confluences. All right, so, but like I said, I see no type of pullback on CAD, so I'm just watching it. Like for me, I don't be thirsty like, oh, this move has to happen, or I want this to happen, I'm just gonna stock it. Nope, I just wait for what I like, and then I trade that, and I just take my shots, man. Like you're not gonna get all the trades right, but you got to take your shots. And if you're doing pendings, they're not gonna all activate either, but you have to take your shots. Keep your risk managed, because sometimes you'll be like setting 5 or 6 pendings, and that could be a lot. Like say all of your pendings activated and you didn't expect that, you could be overexposed on that account. So for me, I just say lower your risk on each trade as to not over leverage in the case that your pendings do activate. And I do apologize if this is over anyone's head, because we're just jumping right in, right? We're jumping right into where we're at. We already know structure. We already know market manipulation. We know stop hunts. We understand momentum, right? That's the level I'm coming from into these sessions. Now, if you're someone who's new to what we're doing, or you just are struggling with these concepts or they're confusing you, go ahead, ask in the chat, right? We are here to slow down, break it down. This is a new platform, right? But I'm just gonna assume you know what we're doing, and I'm just gonna approach these setups as such. So with that said, let's go ahead and continue on. USD CHF, bullish, right? Already approaching a previous high. Leave it alone, man. Leave it alone. Unless you're looking for a reversal, but I'm good. I'm good. See how I did that? I'm good. I looked at it like that and I knew I was good. This is bearish. Super ranging. I would personally just chill on this right now. Let this range figure itself out. Super ranging in a bearish market. Working the lows. Leave it alone. Like it might do something like this, right? And if it does, I'll look to get in on a retest. But for right now, leave it alone. All right. I'm gonna fly through these and we'll call it a short session if because it's pretty quiet in the chat. We don't have too big an audience, and I don't have anyone on the panel. So for today, I'll just look at the pairs and we'll get up out of here, and then we'll reconvene on the next one. Sorry, I know this was set for an hour from now. But I was here, I was ready, so I jumped on an hour early, and yeah. So if anyone was expecting it and I was late and I was too early, my bad. But you could catch the recording, and if you yourself are going to be trading FOMC and you wanted to kind of bounce ideas or just prepare for it, this is a good place. Like, this is good time in an hour before it. So yeah, any FOMC related questions, comments are more than welcome. Usd Cad, we crushed this one yesterday, right? We did like 40% on this one. So it was a really good trade. I did close it at the low. It went for about maybe 220 pips, but I did take 150 pips out of it. And for anyone who saw my trade, y'all know what's up. Let me see. I won't even bring up the screenshot. Let me try to bring it up on the phone. Hang on. Okay. All right, here go to, let me see. Y'all might not be able to see it, but oh, hell no, y'all can't see that. Hang on. Now, bear with me. I'm going to share this. I'm going to share this screenshot because it was phenomenal. I just got to go load it up real quick. One moment. Go ahead and ask any questions while I go pull that up. Oh, here we go. I found it. Okay. Yeah, buddy. All right, let me share. But yeah, we took that one. We took Usd Cad as well. All right, but yeah, this is I'm sorry, we took GN as well. But yeah, this is the Usd Cad trade. As you can see, we saw the momentum, we saw the shift, and then we waited for the pullback to our level here. And you see it was essentially a zero drawdown trade. When I did take the screenshot is when I closed out the trade. So I took profits at the previous low, as you can see, right? So I'm showing this to say, like, this is the process. You execute it. Sometimes it works, sometimes it doesn't. This time it was a flawless trade, right? So yeah, moving on. Key levels are round numbers and 50s. Yeah, they are, as well as the quarter levels. So 0.25 as well. So a whole number, a half number, and then a quarter number. Those are all key levels. So let's go look. Let's go. Let's just go map some out real quick. Always a good exercise if you're trying to learn these. So actually, I'm gonna give you. Nah, I ain't gonna bust out. I got an indicator that draw them, but that's cheating. We ain't even gonna go there. So let's do 1.55, 1.555. But you can't forget about 1.525. And then you can't forget about what? 1.6. I'm sorry, 1.56. Sorry. Is that right? Did I mess up? 1.555, 1. Nah, that's not right. My math is off on this. One of them days. Oh, that's why I forgot a whole quarter. So 1.5575, right? Quarter. And now 1.55. I'm sorry, 1.56. I picked a tricky one, but maybe follow that logic. Did that make sense, or do I need to do another example? But you see, it's basically every 25 pips. And just looking, look, key level, wicks to the key level, wicks to the key level, wicks to the key level. Wick. You see, that's why I be using it. But how would you uncover this? You're not going to figure this out unless you backtest and mark up your charts. All right, I could tell you about the power of key levels, but you got to throw them on and backtest them and work them into your system if you want to do this. You feel me? So that's my advice. But as you see, our entry into the trade was here. Let's just do a short. It's essentially here. We did have a 10 pip stop loss. And then we had to take profit around here, actually. Yeah. Because I had about 150 pips, I believe. So it did go for more. I could have pulled out almost another, 75 pips. But no greed, no regrets. But I'm glad I took my profits because, it was based on this low being broke. And I started to speculate price could come back for the day. And then you see where the greed can fuck you over is, right, like I said, I crushed it. But say I just want to hold it just a little bit more and I don't take any profit. And now look, it's back to damn near my entry. So for a day trader, you got to be aware of how these moves move on a daily, and you need to capitalize on that. What's up, boss man?
What's going on, man? What's going on, bro?
How you doing?
Chilling, man. Just been grinding it out, man. It just clicked to me, bro. It clicked to me really well, man. So I'm taking this thing 1,000%. I'm Super Saiyan God mode right now, bro.
What clicked for you?
I was trying to dab in a couple of other stuff, like college and trying, all this other crazy stuff. But I was like, man, if I really want to be a full-time trader and a person who makes consistent profit with this, I'm just gonna go all out, bro. This is my school, this is my education, this is my everything right here. So I'm just gonna take some time and just wait it out next year and then start really making some real money. But right now, bro, let's get to this example, key levels. One thing I use, I don't use a lot of the mid figure, the 50s or the 20 levels, but I like using the big figure, 00. So simple and effective thing that anybody can use for that specific key level is if you see a solid trend, just wait for that pullback to that level. Price is going to kick out some stop losses, whatever the case is, and then wait for a session to hit, and then execute the trade. That's what I've been using in my arsenal. Just that big figure level, clean setup, London or New York, create that higher low today, and let price take me where it wants to go. You know what I mean?
Do you be using pending orders or you manually get in?
I manually get in because sometimes it's not the 00 level is just a reference, but it can go to let's say I want to sell 00, but it'll go to the 20, it'll go to the 50, it'll sometimes even get to the next 00 level. So I gotta wait it out, be patient, look for some indication that price wants to break down, and then I'll take the execution on my end. Usually the execution will happen 9 a.m., 8 a.m. ish, New York time. So you can see GJ right now, actually, if you want, or if you want to stick to GCAD. Actually, GCAD is
we can go to GJ, but let me ask you, what are you looking for? You said that you wait for price to go to the key level, it might blow past it, and then you wait for signs that it's gonna go in your direction. What kind of signs are you looking for?
So my bad, my son.
No, you good. Okay. It's ambient sound. We love it.
So if you want to go to GJ right quick, I got out of the cell, but I was spot on with the so if you go to GJ right there, right, 30 minutes is perfect. So you see that 163.000 level?
Mm-hmm.
163, yeah, if you could point that out for the crowd. So yeah. Now if you know, so at that level right there, yeah, cool. That right there, and then that happened during what time was it? If you can point that out. That happened around
New York.
New York, 8 a.m., right?
Yeah.
Yeah, perfect. I took that and left because of the fact that we hit a certain we hit a on the daily structure, price is still bullish, price is still nice and strong. So I felt like once price with all right, so if you see right there that I believe it'll be the I believe it'll be the I'm gonna go on my chart right quick so I can tell you. So just because of that bullish structure and because of how price moves around that 0 level, if you can place, if you can go to one, hold on, my bad, bro.
No, you're good. Take your time.
Okay, so price hits somewhere around there. Let me go on here. GJ, my fault. The analysis was in my head and then it just went away. So let's go to GJ. So, okay, perfect. So you can go to 162.00. You can tap
Okay.
that right there. Okay, cool. So if we all know how like price moves around this big figure level, it doesn't automatically have to hit it. But because of that nice daily bullish structure that we have, I believe that price probably grabbed some orders from that 162.00 level. It grabbed like a good how many pips was that from the 00 to that low? Using the volume. The volume, that's the you can still see. Yeah, the pip. So if you can see how many pips
How
it
do
grabbed.
you? Hang on.
Yeah, you're using the wrong one.
Wow, I just use the ruler always. Which one am I supposed to
Oh,
use?
okay. So you can use the you see where you have your longs and your short tab,
Yeah.
the
Uh
arrow,
huh. Yeah.
and click price range.
Okay.
Yeah, from there. So
Like
I'm
that.
yeah. So it should tell you how much the price range will be.
Maybe I gotta put the labels.
Yeah. Yeah. Labels.
Think. Oh, I had the label white. That's what it is.
Okay, cool.
I think I messed with this before. Okay.
So
Is that right? Is that how
right,
it's looking?
that is
Okay.
perfect. That is perfect. So
So it's 68. It's 69 pips.
yeah, so with using the big figure and this daily night structure, price probably whipped down, took the orders, and now we can see some bullish signs right now where price on the hourly just broke some structure to the upside. Just that one little high right there. If you I know you can see it, right? That high that got broken right there at the top.
Where?
This high, that high right there. You just yeah, that high.
Uh
Yeah.
huh. Yeah.
So that high got broken. I had noticed some lower highs, higher lows being created. So I just want to be careful
Right.
right there. So I took out my profit from 163.00 to my 160, yeah, I took out my profits from 163.00 all the way to I believe it was one 162.15.
Okay. For like 85 pips.
Yeah, I could have held it a little bit more. As you can see, price is now more deeply in profit from where I executed the sell from, but it's all good.
Why
I'm
would
just
you close where you closed though?
because of the fact that you see those higher lows being created. So prices at price is at a nice zone to where that big figure is right there, that 162.00. Price can just whiff down on that and then just take off. And I don't, and I, I'm not having it. So I just took the 85 and I left. So you can kind of draw it imaginatively. So you can see that 0 level. You can draw an arrow going below it just a little bit, and then more than likely price is gonna take off.
Mm.
Mm-hmm.
I don't know, man. You might have had it right. Because this boy could just drop, you know.
I know,
But I
man.
feel you because, but I will say, bro, like be careful in trusting your trade and your setup, you know, because I don't want you to let the price action, you know, push you off your position sometimes, you know. So I want to say that because but I get it because, you know, this is, I'm just going to delete everything. It's, you know, it's overall bullish, but, you know, we could be reversing, right, off this high. So, so I get it because it's that uncertain time. So I guess it would be more safe to basically like wait for them to break this structure, you know, because we're looking at when the structure broke, and on the daily structure, this would be the structure to be broke. So I get your precaution.
And also, but also, I had a feeling of going into a sell, because if you click on the hourly one more time, you see that little trend line forming. That trend line is liquidity. That trend line is something to where price can touch it, retrace just a bit, and then attack it. So it's right there. It's the higher lows being created.
This trend line?
No. Right there. The retail, I call it the retail trend line right there. It's right there by the.
I guess I should ask the downtrend or the uptrend.
The uptrend.
Oh. I'll be real fan. I don't even draw trend lines no more.
Yeah, I don't draw trend. I just use them just to see where's the money at. So if that,
I got you. Like
yeah,
this one?
Yes, man. So I'm thinking price can just tap that, just retrace a bit to the upside, and then boom, just snatch. Can just fall.
So why you ain't keep it though? Or that's like retrospect.
All right, I'm gonna be honest with you, man. I got a homeboy. He's real good. He got in some box.
Bro, I'm sorry. I'm gonna be real. I'm gonna get to it. I'm like, wait.
I got a homeboy. He was like, bro, I'm in the buys. I'm like, okay. All right, you know what, man? It's too much contradiction right now,
bro.
man.
Look, I'm gonna tell you, trust your shit. You own your shit, and if you get it wrong, you get it wrong. But I ain't gonna give you a hard time because you still made bread. You know? But and then if you're not sure, sometimes what I want you to do is pull out most of your position, even if you pull out 90%, and just leave a runner just to be in that trade. And what it's going to do, because what's happening is you starting to get trading, starting to understand it. This is what I'm perceiving. Maybe I'm wrong, but now it's like, how do I hold these trades? That's what we all come to. And other people's opinions, price action, all these are things that can knock you off your position. Am I saying that you're wrong or you're right? Shit, price can go up 1,000 pips. I'm just saying, you know, like in what we're doing. You know what I'm saying, bro?
Yeah, man. You
No,
know,
it's
what it
nothing
is.
nothing to shake your head at. You good, but just like something to think about as you build your confidence as a trader, and you know, just kind of taking your setups, and especially if you're concrete in your rules, you're gonna be like, I have to leave the trade. Like my rules say this. Like I take this trade, and it will be less of like, I feel like price is gonna. If you find yourself saying, I feel like price is gonna do something, or I feel, that's always a red flag, because it's like you're getting into that subjective. But if you're like, oh, and I'm not saying you can't be like, I see like, you know, a bunch of wicks being thrown and exhaustion. Like these are market conditions. But yeah, that setup. Why is it looking? Oh, let me fix it. Yeah, because that setup is good. But I would have probably took profits there. You know.
Yeah, man.
Or there.
Easy 1 to 10, bro. Easy 1 to 10.
But still a good trade in all. It's a win. You're learning from it, and you didn't lose money.
No, for sure. But it's just, I want to hold, like, man, let me tell you something, man. I want that 45%. I want that 25%. most I milk out is like 15, 10, 8,
That's
5.
still damn good.
Yeah, man. It's just I'm taking it, like I said, man. If this is gonna be a career for me, I'm taking it more serious. Then at this point, it's just time to really just ball out, man. There's a recession about to hit too, so we got
You
some.
just gotta take your shots.
Mhm.
Like I was saying when we started, gotta take your shots and
Take your shots. Yeah.
just be good with them. Trust me, I do the same thing sometimes. Move to break even too fast, or close a trade. But just keep like, how Steph Curry is. Like, just keep shooting. You don't care. And he's the greatest. I was telling my girl this morning. I was saying like trading is exactly like basketball. And since like, Steph Curry, they won the other day, but he was 0 for 7 from the 3.
Right.
That's like being 0 for 7 in trades. But do you think he cared in this next game? He's still the greatest shooter of all time. He averages 43% from 3-point, but he went 0 for 7. You see what I'm saying? Like, and that shit will break most people. Like, there are athletes who stink it up and then they never come back from it and they lost their confidence. But one of the traits that I see in, the winners or whatever is they'll, they say like the athlete has that short-term memory. Like, he throw the pick, he don't even care. And that's how we got to be with our trading, not to be reckless, but like, we can't let our losses or even our wins shake us, because that happened to me a lot. And I'm finally moving past it and really seeing trading for what it is. And the more I get there, it's just like, it is like you just stop being emotional about it. You're like, okay, and what? All right, what's next? Yep. Not like, oh, damn, or shit, or ooh, yes. It ain't none of that. It's like, let's get this bread, bro. We hustling. We out here. Let's go. Like, get down court, cover your mans. Like, none of this. Yeah. Then the nigga dunk, then the dude dunk on your head. You know what I'm saying? So you gotta be focused.
Yeah, man. One thing I could say is that back testing helped me really be a real back testing and looking at the markets left and right, doing the same repeated shit over and over again really helped me get into that mindset like you talked about, like just being more like, actually I say like being like robotic, being neutral, being like, if I win, I win, I lose. I still got another obstacle to accomplish, so let me just head to that obstacle. So that's one thing that I can pinpoint out right there for sure, bro. I'm just like, I was back this whole entire 2-3 weeks this month. I just been, because the thing is that I get anxiety, I get anxious when I think about the charts. So one thing I could say that if people, and I know I'm not the person that the only person that feels like this, but the only reason why people feel anxiety and fear of the chart is because you haven't put in enough work and enough time into the charts as if it was your own school project, bro. Once you start looking at the same shit over and over, like yesterday I was on a computer, I was like, shit, man, I'm bored, I'm tired, I don't even feel, why am I doing these analysis for it? But then I think about it, I'm like, yo, if I go back outside and I swear to myself, if my heart starts pumping and I start sweating because I'm thinking about what level this and that, and I'm thinking about the intricate stuff in the market, I'm just gonna go and do 100 push-ups. But I was like, nah, let me just sit here. Let me milk it out. Let me just keep seeing the same thing over and over, so that when I do head outside, I'm not scared no more. When I do head outside, I'm not.
Do you have your trading plan written out step for step, precise, objectively, like airtight plan?
I need to do that. I don't have
that. I'm telling you, bro. You do that, that anxiety gonna calm down, because it's too many variables in the market and it's too many variables in our trading. So if you want to feel any type of peace in your trading, get that shit so, I'm sorry, I'm cussing today. Get that shit so fucking clear that you can't miss it. And I see this in a lot of traders who get it down, but also in me. Like, if I'm learning some new stuff, like I was studying with Neo for like a few months. I didn't trade that way, but I just started it a few weeks ago, actually trading it. But in doing so, that weekend before, I had to sit down on my whiteboard over there, right?
That's your trading plan?
Yeah, that's my trading plan. I got the big whiteboard over there for my vision, but yeah, this one is just for my trading plan.
Facts.
See,
I
and
love it.
I had to sit there for like an hour or so and rewrite it step by step, make sense of all the steps. And then, you know,
Mm.
obviously back test it, get comfortable. But then when you go into the week, it's nothing left to chance. It's like, did it follow the rules? And then the only time you're gonna be like post pre-trade is like, oh, is it really, because my shit is like identify overall trend, right?
Yeah.
So I wait for a bearish market. But sometimes, like GJ today, right? It's like, is it reversing? So those areas
Mm-hmm.
are going to always be in chance. Is it a continuation? Is it a reversal? Like
Mm-hmm.
that's it. But everything else, like mine says, this is so simple. Identify overall market direction,
Mm-hmm.
enter on retracement to the trifecta zone. That's it.
Oh, sure.
So then I specify what my trifecta zone is, right? The fib, the key level, order blocks, ECRs, whatever. Trifecta zone is essentially just enter on retracement to an area with multiple confluences, whatever your confluences are. And
Mm.
then I say, take profits at previous high low, and then a little asterisk, leave runner if I want. And then I got a note, move positions to break even after the break of structure. So all of that is just, it ain't no way around it. If I break a rule, I break a rule.
Mm.
If my confluences ain't panning out, I need to get back in the lab. If I find myself trying to make the confluences fit, like make a shoe fit, I need to check myself and tap out. So you'll kind of find yourself saying like, oh, this setup meets my rules. It looks good. And maybe you don't feel 100% comfortable. Maybe you're like, I don't know. It meets my rules. Fuck it. Take the trade. And then it's going to be other ones. Yeah, I like it. I feel good about this, but my rules aren't met. Leave it alone. Watch it. And if you miss it and it go 1,000 pips, oh man, I could have had that. Oh well. Next time, make your rules meet that, because that's all we got, bro. It's like our balls in our word.
Yeah, that's what I'm saying. And I feel like just you guys, like all you guys that were in Phorexia, people that I'm learning from the outside, people tend to always want to separate and not see the connection with these little components that everybody has been trading and has been doing, bro. And it's coming back to these numbers and everything, and keeping it basic, keeping it effective is like the best way to do that, man. Like it's the best way to like your trade plan is just quick. It's simple but effective. It's like hits the level, wait for the confirmations, wait for the confluences, boom, 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 bread and butter. Are you looking for any more confluences, confirmation, or are you just gonna be you just wanting to learn just to learn? Because at the end of the day, this is like something you taking serious. Like what is your plan for like trading and all of that?
I think I have more than enough tools to use, but basically at this point, it's just learning order flow, like understanding how the banks place their orders. I literally don't need anything. Like I don't need fib and none of that. But so I think that's the evolution, is just kind of trading along the lines with the banks. But what I did in my back testing is just, because I gotta preface, the reason I got into trading, obviously I want to make money, but I heard about Fibonacci sequence being used in trading, and I was big into like the spiritual, sacred geometry, blah blah blah. And then I was like, wait, you can get rich off sacred geometry. So then that's what made me start looking at trading, and just to see how you could break down the market like that. So I always look to, I call it glitching the market, kind of like seeing beyond the matrix, right? Like Neo, when he saw everything in zeros and ones, when you start to get your fib and your key levels and all that, and you're like, hold on, price hits the key level 100 times. Like, what do I do with this knowledge? How do I make a system around it? So I think
Yes.
I will make more systems, and they'll get more simplified as I go. But it's all back to the understanding. Like someone earlier asked, Mo asked, do I still use DMA? No, but yes, because I see
You can.
DMAs without them on the charts. I can throw them on as a confluence. So it's all going into there. But they're just kind of like tools in your belt at a certain point. And you don't like, like you're a master carpenter. Oh, this needs a level, or this needs, I don't know, got to sand this. So, but in saying all that, you need to keep your plans simple. You don't be like, oh, sometimes I use fib, sometimes I use this. And that's why in my plan, I called it the trifecta zone, 3 or more confluences. But basically, my momentum will always be there based on the fib. You know what I'm saying? So it's already like a twofer. And then, there's a key level. Yeah.
All right, for sure then, man. Like, I plan to use all of that. I plan to use all of that. And like you said, those key levels are precise, man. Like I said, I stick to the big figure levels. If I have a nice strong trend, once price retraces to it, I wait for a certain time. And then boom, boom, boom. Wait for an ECR or wait for a Fibonacci retracement back to my fib level. And then, like you said, like the Neo, see how it connects all together and keep it simple. And that's what I'm, and I can find, and willingly, if I search through the market, I can find that one trade setup. It's a trade setup. It's on the H1. It's basically a breaking market structure. And then it's price retracing back to the Fibonacci level. And then it's nice to see it once it hits a specific institutional level, and just let it go. And then if price is playing around my MAs, I like that too. And
so how are you gonna put this all together into a concrete trading plan?
Oh, a clear setup. If it has to be a very, very, very clear setup.
Let's hear it. Let's go through it right quick. Shit.
Okay.
So what do you look for first?
Okay, so I look for
and grab a paper if you need to, take your notes or whatever, because I know you say you are building your plan still, but we'll build this right now, and then bro, you run it for a month straight.
Okay.
And shoot, because I know you mentioned like you're gonna kind of cool out to next year.
Yeah.
I say screw that. Let's get it going now. We might have you, consistently profitable in a month or two. Like real talk, bro. Because your understanding is there. Now it's about like putting the whole playbook together, and then just run it back, and then battle yourself, because your real battle is gonna be that anxiety and trusting yourself. But we'll let the system work for us. So what's your first step?
So my first step is to look for the daily momentum. So first step is look for daily momentum. Daily momentum, daily structure. What is price doing? Is it bearish or bullish?
Right. Same like me, overall direction, but in your words, I like it. I like it.
All right. Number two is number two would be check H4 and H1 structure.
Okay.
All right. Yeah, check H4 plus H1.
And what are you checking for?
All right, so like for instance, looking if price is creating, if we're bullish, looking for price creating higher highs and higher lows. Number three has to be now it's gonna join with the indicators.
Go ahead and put in parentheses on your second step, higher highs, lower lows, or something like that. So you clear that. That's what you're looking for when you drop down, and you could identify it. This is money, bro. This is exactly what you want to look for. Okay.
Number three would be I like to see, all right, so when we're bullish, I like to see nice rejections above DMAs. So that's one thing, right? I put that on three. So rejection above DMAs.
So now you're incorporating an indicator in your setup, right? So you require EMAs for every trade, right? Okay, I'm following you.
Okay, cool.
Okay.
All right. especially that cross. So instead of, so you know how the ECR you can use it for confirmation on the M15 or lower time frames,
Yeah.
but on the higher time frame, it's nice to see that it's a cross on the EMAs on the higher time frame. So I like to I like to look for EMA cross.
So what step is that?
I'm gonna add it. I should add it to number 3, right? For the rejection above MAs and looking at the EMA cross.
Okay. So, and that's on your which time frame? 8, 1, and 5? I mean 1 and 4?
H4 and 1, yeah.
Okay.
Number 4 has to be well, I was thinking about number 4 being like an intraday type of vibe. So I
Because
guess
you're essentially going down. You're on your daily,
hmm
then you're on your 1 hour, 4 hour. Now you're
hmm
going down to like 15 minute for entry, or not necessarily. Do you enter on 1 hour and 4 hour candles too?
I like to enter on the M15. I like M15 and M5.
Okay.
Okay.
All right.
So,
So now you could bring it down to your entry, which would be level 4, I guess, or step 4.
okay.
Okay. And I think off top, bro, you're gonna need to refine this plan, but this is part of your process. Like we're making progress for sure.
For sure, for
So,
sure. Okay.
yeah.
So M15, so entries, so M15, M5. So with that, it's
What
just
are
it's
you What are you looking for on that?
oh, okay, okay. This is what I'm looking for. So on that, I'm looking for, so for bullish, I want price to retrace to a big figure level during a certain session before price takes off, before price distributes or expands. Is that a good? You get what I'm saying?
Mhm. Yeah, I like that. I'm just thinking how it works with your other ones, and I'm almost thinking, do you? No, I follow. I follow.
You get what I'm saying?
Yeah, I get you. Yep, stick with it. Stick with it.
Okay, okay. So
So this would be where you enter at pullback to key
yeah,
level, or right?
enter at pullback to key level.
Is
That's
that going to be
exactly
the
what it is.
only confirmation, or like are you using EMAs on the lower time frame, like Brandon style, or
I should wait for that. Once price pulls back to that key level, I should use an ECR. I should use the ECR, or yeah, I should use it. I use a lot of so the thing is that with my trading style, the daily candle is an open, low, high close.
right?
So I wanna get in on the body like before the body expands. So how would I be able to formulate that? Like
Um,
like
I mean that's what you're doing when you enter on the pullback, because
mhm.
once the body expands, it's going back. Like so, if you were, you're buying, it goes up, it goes down, you buy. As it goes up, it's filling the body. So it's doing that inherently.
Mm. Okay, okay.
But back to your key level EMA entry, I think you need to mend those or
Mm.
make sense of it. Even if you say something like, I'm just throwing it out there, like
Mhm.
enter at ECR, and you could say key level as confluence, or you could make it that it has to be an ECR and a key level. But keep it simple. So
No, you're right.
this
So
gonna be the part where you got to kind of figure what you like. Like,
no, you said it correctly. So once price hits the key level, I just can't enter on that. I still have to wait for that one more confirmation for me to be like, oh, okay, let's go. Which will which will actually be like on the M5 or the M15. Now I'm waiting for those MAs to cross on the not the higher time frame MAs, but the lower time frame one. So it'll be like boom, London creates a low today. London hits my big figure level. London pulls back, hits my big figure level. Then I wait for on the M5 or the M15. I wait for the ECR on those time frames, and then boom, that's when I'll take my trade. What do you think about that?
I'm gonna need you to back test it because it does, and maybe just send me some screenshots. Because now I'm thinking it might be too like
Too much?
right, like where you're not gonna get the setup all the time at the end. It might maybe like you just simplify how you enter it.
Mm.
You know.
Yeah, like I said, I could use the hourly chart. So basically, on the hourly chart, I'll wait for the trend to be in place, and then I'll wait for a, let's say it's bullish. I'll wait for a break in market structure. Then once price pulls back,
Right.
during any session, then once price pulls back to my Fibonacci level, and then it hits a big figure level, I could just take a trade like that.
So now you're bringing in Fib.
Yeah.
You threw out ECR.
Yeah.
So let's table this right here and keep work. What I think you're getting there, bro, but you still got to figure out what confluences you like to enter on that pullback. Right. It can be as simple as just sell a buy candle, buy a sell candle into the EMAs. It can be as advanced as 38 Fib, key level, ECR order block, all aligned. But you need to kind of find that for you and, do the back testing and, do the whole dance. But you're there. So the first steps of, checking the daily, seeing what it's doing, drop down to the lower time frame, waiting for the structure to be broken, higher highs, lower lows, and then getting in on a pullback. That's a really safe move. So, yeah, just refine your confluences for your confirming your entry, and shoot, like let's do this again next week and or in a few days,
I mean, if it's possible, like I could low key like show you on the H1 right now.
I don't know how to let you share your screen, or does
No. You can just Oh, well, it does say share. It kind of does say share.
Okay, try to do it.
Okay, all right. So
see, I'm still getting used to this platform. Dang, we look good, man. You handsome young men made mama proud.
Oh, we do. We doing it. So,
okay, yeah, I got you, bro. It popped up.
Okay, so do I go right here?
Yep, we seeing your chart.
Can you see my screen?
Yeah, I see your chart.
All right. It don't look like too much, right? These are just the big figure levels. So 165.00. This is my
what's the wait, what hang on, bro. What is that stuff you got at the bottom? What is that?
What?
At the very bottom.
This is CCI right here.
Throw that out.
Okay, all right.
Throw that out. You don't need that, bro. You got this. Okay, I'll rock with the rest. What are those high and lows that you got an indicator doing?
Where?
Those little lines.
That's the daily opening price.
You drew that, or you use an indicator?
I use the indicator. I use the
Take it off for now. You could keep it in the background to help you find your spacing. Find your where I'm at temporarily. But yeah, and you see, all I'm doing is helping you clear out your chart so we can see stuff. Oh, you got to plug up.
yeah, I got to plug up. You saw that, so
yeah.
Let me go and plug up right quick. Give me 1 sec.
Okay, take your time. Hey, y'all see what we doing live on air, putting together the brother Giovanni's trading plan, because you see he has a deep understanding of structure, the market direction, all that, and he ready to crush it, right? So from here, it's just putting together the plan and taking it from there. So put the plan together, and get the reps in, and that's what we're doing.
Facts.
All right.
Okay, the reason. Okay, so reason. Well, I got my H4, my H1 21 EMA, H4 21 EMA, and my D1 21 EMA. I'm not saying I need it, but so reason why I took this was because, and this would be what my whole entire trading plan.
Okay.
To keep it in the simple, just staying on the H1 chart, not even messing around with the M15. So
that's what I recommend.
All right. Yeah, there's a lot more clarity here. This would be my bearish breaking market structure.
Yeah, nice.
I would use my Fibonacci from this high to this low. So price went above my 50% level, and it touched the institutional 0 level. And this was the main reason why. And price is still underneath my MAs.
What Fibonacci levels are you using, or do you use them all?
I use 62, 70, and 79.
So what about 50?
The 50 is just an indicator to telling me that this is a temporarily, like price is now at a temporarily overbought level.
So you shouldn't have sold this today based on your rules.
I know, but this level right here is what made me just go for it. Like this right here.
I know. I'm just saying, like, we just putting it together, bro. So because I mean, if you said, like, for me, I only use 38 fib or 50% fib, right?
Oh, okay.
So it ain't the fib level per se, it's how you use it. But I've been there where I'm like, I'm going to use my fibs, and then you got 4 or 5 of them. And that's a lot, and price is going to play off of all of them. So I think if you're using them for confluence, you need to use less of them, like 1 or 2, or you would only use fib because it's going to be too many variables for you.
So I guess I'll just use the 62% and the 705%.
Okay. And just, fuck around with it. You're going to figure this out over the next few weeks. But I'm just putting it in your ear now, and then you'll put it together.
Right. Yeah, I'm just, like you said, I'm just trying to figure this out. So
we labbing this shit, bro. I swear today. I promise it's going to help today.
Yeah, man. This is a blessing for real, man. Let's get to this work, man. So we have price hit my price hit my 0 big figure level, which is something I like to see. And then it was during a session, so I like to have my kill zone. So it was during New York session, which is another reason. If it hits either the London session or New York session, London Open, New York Open, I'm willing to take the sell. So I don't know what else, man. What else is?
You're gonna have to back test it more. That's what it is. And then you're gonna be like, so are you finding that price go to a certain fib and a key level together in your setup more than others? Like it hits the 50 and the whole number, or 78 and the whole number, anything like that?
I could show you a set that I took about 2 weeks ago on GJ. So right here. So this was a set right here. So I also seen this breaking market structure here.
Right.
Price was playing underneath my MAs, which was perfect. Then I used this high to this low. And as you can see, price went just a little bit above my big figure level, and price touched my 62% retracement level. And as you can see, price went more than 300 pips. And this was during NY session. So this is like a repeated thing that I see all the time.
So does it go to between the 50 and the 62 a lot? Is what you're seeing?
It goes between the 50 and the 705 a lot.
Can you said 50 and 705?
Yeah, so it goes between.
What would your stop loss be if you placed it at the 50 down to the 705?
You said what would my stop loss be if I placed it on the 50%?
But you place your entry at the 50 and your stop loss at the 705. And then your take profit at the previous low.
And then my TP should be at the previous low, you said?
Yeah, that looks good. Yeah. I mean, that's not the most crucial, but still, that's what, 1 to 4, 1 to 3?
Yeah.
How many pips is that stop loss? I can't see shit. I'm sorry.
55 pips.
That's a lot. That's a lot. Okay.
That's why
No, sorry, go ahead.
That's why I prefer to wait. I mean, I would prefer to hit the 62%.
And if it goes to the 50 right below the 62 and don't hit it, you good with those? Like, yeah. I mean, sometimes like you're good with not taking the trade. Like, it didn't come to it. Oh well, you know.
Yeah, I'm good. Okay. I'm good.
Because I mean, this is gonna make you more precise and get a tighter stop loss, but you might miss more trades. But that's okay. That's always
okay.
A trade.
Quality over quantity.
Okay.
Yeah. So and that'll be a 23 pip stop loss.
So now we're getting more refined.
25. Let's make it 25. And then with that being, let's say if I took the trade, that'll definitely be. Let's just say I milked it.
Let's just say you milked it. Okay.
Let's say I milked it. Damn, but so every 100, I guess 100 would be 1%. So this would be a 650 pips. What is it again? 650 pips. With 25 pip stop loss. Like about 1 to 6.
It don't tell you, do it? Doesn't it tell you?
I like to use my brain sometimes. But yeah, it's a 1 point. I think it's a 1.62%.
Something crazy like that.
Yeah.
What would it be if you just took it to the low?
Oh, that'll be nothing.
Yeah, I mean, it's still a value. Like this is an everyday trade, you know. So if you let's see what that would be.
This low right?
Yeah. What would your risk reward ratio have been? That's butter.
25. So 20, 40, 60, 80, 100. I'm tripping. So that'll be more than 5. That'll be actually almost 10%, I think, or like 12%.
Risking what?
Risking only 25 pips. My bad. My math was wrong.
I mean, risking what percent?
1%.
Oh, so a 1 to 12, which is amazing.
Right.
Yeah. Okay.
So I should just stick to the hour. I should just stick to the hourly chart then.
I agree.
Okay.
And realistically, bro, if you're doing your system like this, you could set pending orders and just let it rock out because you already know the level and the stop loss you're looking for to pull back to. But if you want to go down and wait for the 5-minute breaker structure and all that, you know, you're gonna want to do that live, or you see it happen live and then you set up pending a little bit of, you know what I'm saying? So, but just know if you develop this system, you could have it just on auto trade. Like you find your setups and you go put in your pendings and you go about your day.
And another thing is
you have the tools.
Another thing is that, but you see like this big uptrend, nothing. I don't have anything here, bro. There's nothing here, man. Nothing. That's the only thing that's keeping me like that's why I guess I want to go down to the M15 and the M5.
Bro, I see an entry too. I see an entry though at one right there. Yeah.
Oh, if I place my fifth?
It's at the key level for sure. Boom. That's at the 50 though?
Yeah.
Right. Yeah, go fuck around in a lab. I'm telling you. But you getting somewhere, bro. You getting somewhere.
For sure, man. So, but this is good. I mean, yeah, this is nice. This is nice. It hit the key levels. This right here, there's a whole bunch of orders here that price need to go and grab before it took off. So, I mean, I'll take it. 50%. So roughly, most of the time, like looking at other charts and looking at other things, like Let's go to with my G Cad. So run the G Cad. Like this was such a beautiful trade right here that I took yesterday.
I took this one yesterday too.
This right here was just.
I entered on that wick, bro, exactly at 7 at right there. I entered right the fuck there.
Yeah.
I had a pending. How did you get in?
This was it. This was the setup.
So it went right to the 78.
Yeah, right here, and then let me go to my short, and then
Where'd you enter?
I entered right here on the 79 right here.
You did it live, huh?
I woke up in the morning and I seen it, and I'm like, oh nope, I got to take the opportunity, and I actually put a 10 pip stop loss.
Wow, me too.
Yeah, 10 pip stop loss.
So we had the same damn trade.
Right.
We just arrived at it differently.
Right, exactly.
But it was all the same concept.
And then price went to the big figure level, but still went above it, still grabbing orders, and then next thing you know, price just took off.
Do me a quick favor, draw a fib retracement from the top of that move, the very top.
Oh, okay. This. Oh,
nope.
Okay.
Up more. Right there. Keep going. Yeah. And then go ahead and put in a 38 for me.
From what low do you want me to you want me to
No, you got the low right. Go put in a 38 fib. Like add it to your fib.
Okay. What do I this one right here?
Yep, that one.
Let me make it black.
Let me see if that.
Okay.
That's me right there.
That's you?
Yeah.
So that's how you use the fibs?
Yep.
Okay.
I just get the whole, the whole recent move, and I use the 38, and then you'll see it's an ECR, on 4 hour or whatever.
This is solid. Solid.
All right, let's go ahead and end it here because we're gonna be labbing all day. But are you gonna be free next week to get on a panel with me?
Yeah, for sure. I got you.
What day is gonna be best for you?
What's today?
Wednesday.
Wednesday. So.
Yeah. Or shit, we could do tomorrow if you wanna thug it out all day, or we could wait till Monday and give you the weekend.
I got you on Telegram.
Okay, but yeah, I want to get us back in here, and
I'm gonna definitely let you know because I work and everything, so I gotta dabble back and forth. So
we'll make it work. I'm proud of you, though. I just want to say I'm proud, and I see like you're almost there. This shit is very, it's not mystical. It's very like logical and follow the steps and don't cheat the process. And I like what I'm seeing, fam. So I'll end it there.
Thank you.
Thank you to your son for joining in. We appreciate his energy.
Yeah,
you're gonna be trading with us soon enough.
Yeah. Oh, I have files on files. Every trade I took from step one to the last step. So
that's a sign of someone who killing it. You keeping records. So
for sure. Thank you again, bro, for helping me sharpen the toolbox. Yeah.
I appreciate you being brave and just one coming on the panel, but two putting yourself out there because it's tough. Like people online or people in the chat because no one wants to do that. Like come up here, especially expose themselves. But I'll tell you, in doing that, like all that's going to happen is you're going to get better. You're going to be more fearless. You don't give a fuck what people think. All you care about is your growth and your goal, and you're willing to do what it takes, right? I got fired up. All right, G.
All right, man.
Appreciate you, bro.
I'm going to definitely hit you up on Telegram, let you know my schedule, and then we head off from there.
Yes, sir. We'll get to part 2. Peace, guys.